Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, we're putting the spotlight on Intel Corporation, Intel, which has been making headlines with its recent tumultuous price action. As of July 28, 2025, Intel sits at a critical juncture, having experienced a significant decline following recent news. Let's start by understanding the fundamental landscape that has shaped these movements before diving into the charts. Intel has recently appointed Lip-Bu Tan as its new chief executive officer, a move aimed at navigating what the company calls a transformative time. Tan brings a strong track record from Cadence Design Systems, where he oversaw substantial growth, and his background in AI and semiconductor investments is particularly relevant. However, despite this leadership change, Intel continues to face significant competitive and financial pressures, including market share loss and substantial capital investments. Recent news confirms Intel's plans to spin off its networking and communications business, a strategic shift that has contributed to volatility. Reports highlight a 9% stock drop due to efforts to slash foundry costs, struggling to find customers, and the completion of a 15% workforce reduction. Just last week, on July 24, 2025, Intel released its second quarter 2025 financial results, which were widely described as mixed. This dismal earnings report, coupled with new layoffs, directly contributed to an 8.5% decline in the stock, pushing the price towards the $20 mark. Analysts, including Loop Capital, maintain a hold rating on Intel with an average price target of $22.42, signaling a cautious outlook. Now, let's correlate these events with the daily chart, looking at the broader trend over the past year. Looking at the daily chart, we can clearly see the long-term bearish trend that has plagued Intel since early 2024. Starting around $42 to $44 in March 2024, the stock has been in a persistent downtrend, reflecting the ongoing financial pressures reported in the news. Notice the sharp decline in August 2024, dropping from the low $30s to below $22. This was a significant event, likely tied to earlier disappointing earnings or news. This $30 level, once a support, quickly became a strong resistance after the breakdown. Subsequent rallies, such as the one into November 2024 reaching the mid-$26s and the surge in February 2025 to $27, failed to sustain momentum, hitting resistance and reversing. The $24 to $25 region has consistently acted as a strong resistance zone throughout the second half of 2024 and early 2025, preventing any meaningful recovery. Crucially, the $18 to $19 range has emerged as a significant long-term support level, where buyers have historically stepped in, notably in August 2024, January 2025, and April 2025. This level represents a key psychological and technical floor for the stock. Now, let's zoom in on the most recent price action, specifically focusing on the last few days around the Q2 2025 earnings release. Switching to the 1-hour chart, we can observe the immediate impact of the mixed earnings reported on July 24th. The price, which was trading around $23.50 on July 23rd, began its sharp descent on July 24th, breaking through various short-term support levels. The volume on these bearish candles is notably higher, confirming strong selling pressure as investors reacted negatively to the news and new round of layoffs. The drop continued into July 25th, pushing the price from approximately $22.63 down to $20.70 by the close of the daily candle, which corresponds to the reported 8.5% decline. Let's refine our view even further by looking at the 15-minute chart, specifically during the trading hours of July 24th and 25th. Here, the intraday volatility becomes even more apparent. On July 24th, starting from around 13:17 Universal Time Coordinated, Intel saw a rapid sell-off, with numerous large red candles confirming intense bearish sentiment. We can see a brief rebound attempt around $22.80 to $22.90, but sellers quickly overwhelmed buyers, pushing the price lower. For traders, high volume on these large bearish candles indicates conviction in the downtrend, making short positions appealing on bounces. The current price level on July 25th at the end of our data, around $20.70, establishes a new immediate support zone around the intraday low of $20.36. Conversely, the $21.50 to $21.75 range, where the stock previously traded, has now become an immediate resistance level to watch for any potential retests. Now, let's consider the reasons to be bullish or bearish on Intel, both short and long term. From a bearish perspective, the ongoing market share loss, persistent financial pressures, and the recent massive layoffs signal deep-seated issues. The CEO's stated priority of cost-cutting over innovation could hinder long-term growth and market competitiveness. Technically, the repeated failures to hold significant resistance levels and the recent steep decline below $23 suggest the bearish trend has strong momentum. Heavy trading in put options, as noted in the news, further reinforces a pessimistic outlook. If the $20 psychological level and the $18 to $19 historical support fail to hold, we could see a further decline towards the lower analyst target of $14. On the bullish side, the appointment of Lip-Bu Tan as CEO could be a long-term catalyst. His proven track record in creating shareholder value and his expertise in AI and semiconductors might eventually turn the ship around, especially with a focus on improving execution. Intel's pivot to foundry services could unlock new revenue streams, though it's clearly facing challenges finding customers. From a short-term technical view, the stock is currently oversold, meaning a bounce or technical rebound is plausible if it finds a strong buying interest at these lower levels. The current price is also well below the average analyst target of $22.42, indicating a potential undervaluation if the company can execute its turnaround strategy. In recap, important price levels to watch for Intel are immediate support at $20.36 and the critical long-term support zone of $18 to $19. Immediate resistance is around $21.50 to $21.75, followed by the significant $23 to $25 zone. For unbiased predictions, a continued decline towards $18 to $19 is highly likely if the stock fails to regain $21.50 in the short term, reinforced by persistent negative news flow or broader market weakness. A rebound to the $22 to $23 range is moderately likely if the $20.36 to $20 area holds firmly, especially if accompanied by positive news regarding the foundry business or a surprising recovery in chip demand. Breaking the $25 resistance, though less likely in the immediate future given current sentiment, would strongly signal a potential bullish reversal, perhaps driven by tangible improvements under the new CEO or unexpected partnerships. What to look for? Pay close attention to volume during any upward moves. A strong rebound needs significant buying volume to be credible. Watch for bullish reversal candlestick patterns around the $20 and $18 levels, such as hammers or engulfing patterns. Any further news regarding Intel's foundry contracts or progress in their AI initiatives could serve as powerful catalysts. Finally, keep an eye on broader semiconductor industry trends, as they often influence individual chip stocks like Intel.